Hey everyone, in today's video, I want to discuss the piping sector of India. It has been one of the fastest growing sector due to huge demand of CPVC and UPVC pipe across your agriculture, infrastructure and construction sector. The simple reason is historically we have been using metal pipes in India, be it for water supply, irrigation or even for domestic plumbing. But the challenge with metal pipe is that they would corrode over time. So durability is a big concern. Moreover, metal pipes are heavy and hence difficult to transport and install. That's where CPVC and UPVC pipes have revolutionized the piping industry with lightweight, easy to install and without any corrosion, making them highly durable. However, of late piping sector stocks have struggled badly. For instance, there are 5 key players in the sector including Astral, Supreme Industry, Finolex Industry, Prince Pipe and Apollo Pipes. And all the stocks have corrected significantly in the last 2 years. Astral Pipe is down 45%, Finolex is down 27%, Prince Pipe is down 33%, Apollo Pipe is down 14%. Although Supreme Industry is an outlier with positive growth, mainly because it offers other plastic products apart from plastic pipes. So in this video, I have analyzed the reason behind correction in piping sector and its future growth prospects. You would be surprised to know what institutional investors are doing with piping sector stocks. But as usual, before we begin, this video is only for educational purpose for long-term fundamental investor. Make sure that you do your research before investing your money. Alright, let's get started. Ultimately, stock price movement is a function of companies' revenue and earning growth. If the revenue and earning growth would increase, stock price would increase and vice versa. So in case of piping sector also, the fall in share price is directly linked to slowdown in revenue and earning growth. For instance, in case of Astral, after a consistently high growth in revenue from 400 crore in FY11 to 565 crore, then 800, then 1000, all the way to 4394 crore at 24% CAGR, its revenue growth has slightly slowed down to 14% to 5043 crore in trailing 12 months. Whereas its profits, after showing tremendous growth from 33 crore in FY11 to 39, 61, 79, all the way to 490 crore at 28% CAGR rate, has fallen to 410 crore. Mind you, due to the exceptional growth and leadership in piping sector, Astral always command a premium valuation. So due to slowdown in top line and sharp fall in bottom line, that is net profit, Astral share price, after generating humongous return from 33 rupee to levels of nearly 2000 in last 10 years, has corrected around 44% in last 7 months. Likewise, Prince Pipe sales, after growing from 957 crore in FY15 to 1000 crore, 1200 crore, all the way to 2657 crore at 16% CAGR, has slowed down to 7% to 2848 crore in trailing 12 months. And earnings, after growing from 16 crore to 30 crore, 74 crore, all the way to 249 crore at 48% CAGR, has sharply fallen to 116 crore. As a result, after a sharp jump in share price from IPO levels of 150 rupee in January 20 to levels of 850, Prince Pipe shares have corrected 33% in last 18 months. And this is the same trend with all other piping companies including Supreme Industry, Apollo Pipes and Finolex Industry. Now if you observe, although there is decline in revenue growth, but the revenue growth is still positive. However, the earning growth has fallen sharply. So the reason behind this sharp fall in earning is fall in operating margins. Astral margins have fallen from highs of 20% in FY21 to 14% in trailing 12 months. And Prince Pipe margins have fallen from highs of 18% to levels of 9% in trailing 12 months. Likewise, Supreme Industry margins have fallen from 20% to 12%, Finolex Industry margins have fallen from 29% to 7%, Apollo Pipe margins have fallen from 14% to 7%. The question is, why there is such a sharp decline in the margins of piping companies? The answer lies in PVC prices. In case of piping sector, since PVC pipes are kind of commoditized product, the market price of PVC depends upon supply and demand. If there is more supply as compared to demand, the price would fall. And if there is more demand as compared to supply, the price would jump. By the way, the PVC prices are linked to the international market based on the demand and supply of PVC pipes internationally. Now what has happened is there is a sharp fall in PVC prices in last 1 year. Rather, there is a crash in PVC prices. As you can see on the chart, PVC prices have crashed from 2000 to 2250 USD per metric ton in November 21 to levels of 750 to 1000 USD per metric ton by December 22. Now try to understand this. When PVC prices started falling, piping companies had to sell their inventory at lower cost. And since the PVC price correction was very sharp, it badly impacted the margins of piping companies and eventually the net profits. Now, as far as revenue growth is concerned, due to sharp fall in PVC prices, the dealers started destocking their inventory. Obviously, when the prices are in downward trend, as a dealer, you don't want to stock your inventory at high prices and sell them at low prices. So during the fall in PVC prices, dealers started destocking their inventory, and that resulted in fall in volume growth and eventually fall in earning growth. I hope it makes sense. Having said this, the positive news is that from the lows of December 22, PVC prices have started to increase. It means going forward, piping companies would see an improvement in operating margin and eventually the profit growth. And now the dealers have also started restocking their inventory, so that would result in increase in volume growth and ultimately the revenue. I was going through the Concall transcript to understand the near-term growth prospect, and Prince Pipe Management has mentioned that since April 2022, PVC prices have corrected by an unprecedented 66 rupee per kg and bottomed out at about 76 rupee per kg by November end. The trend reversed in December, leading to improvement in market sentiment and channel restocking. Affordable rates supported by underlying demand momentum delivered a healthy growth momentum across all sectors of real estate, agriculture, and infrastructure. Largely, the overall industry sentiments are buoyant across all sectors. As per Economic Survey 2023, housing prices have started to firm up after a 2-year COVID lull and demand has stabilized. New construction is picking up pace, which has stimulated innumerable backward and forward linkages within the construction sector. This holds a good bearing on the building material industry, and we see this trend being stable. In fact, the trend reversal in prices is clearly visible in the recent quarterly result, where in case of Astral, after touching a high of 23% operating margin in March 21, Astral continuously witnessed fall in margins that touched a low of 12% in September 22, but it has improved to 15% in December 22. Likewise, in case of Prince Pipe, after touching a high of 19% operating margin in March 21, margins continuously fell down to touch a low of -2% in September 22, but it has improved to 10% in December 22. In case of finolex industry, after touching a high of 33% operating margin in March 21, margins continuously fell down to lows of -15% in September 22, but it has improved to 8% in December 22. In case of Apollo Pipes, after touching a high of 19.9% operating margin in December 20, margins fell down to 1.2% in September 22, but it has improved to 6.8% in December quarter. Hence, going forward, as the margins would improve, net profits will also improve. And as discussed, due to restocking at dealer level and improving demand across agriculture, real estate and infrastructure sector, the volumes would also increase. That would increase the revenue. And when both revenues and profit will jump, share prices are bound to increase. Now let us try to understand what institutional investors are doing with piping stocks. Okay, before we discuss further, we have a partner for this video. It's M-Stock from Mirae Asset. M-Stock is offering unlimited trading and investment at zero brokerage. You just need to pay a one-time fee of $9.99 and it includes free intraday, free delivery, free F&O, free mutual fund, basically everything free without any catch. And if you open a Demat account with M-Stock, you just need to pay a one-time amount of $9.99 and your Demat maintenance would be free for life. So you pay a total of $19.98 and all your trading and investment is free and your Demat maintenance is free for life. Since M-Stock is a part of global Mirae Asset Group, it brings 25 years of legacy and experience of 15 countries. Since its launch in last 1 year, M-Stock has achieved a big milestone of hitting more than 1 million trades almost every day. It is adding one client every 30 seconds and has added 2 lakh clients with 70% active clients against industry average of 25%. Today, M-Stock customers are saving more than 20 crore rupees every day, especially in the F&O segment. So whether you are a trader or an investor, M-Stock is a great trading platform to save a lot of money on brokerage. And M-Stock is also offering e-margin facility at one of the lowest interest rate in the range of 6.99 to 9.49%. So do check it out. Link is in the description. If you look at the shareholding pattern, DIs are consistently adding stake in these piping companies. In case of Apollo Pipes, DIs have consistently added stake from 8.07% in March 21 to 9, 10, 11 and now 12.17%. In case of Astral, DIs have consistently added stake from 7.6% in March 21 to 8, 10, 11, 12, 13, 14, 15 and now 16.03%. In case of Prince Pipe, DIs have added stake from lows of 11.77% in September 21 to 13, 14 and now 15.45%. In case of Supreme Industry, although DI holding has reduced, but it is because FIs have consistently added stake and net public holding has reduced. In fact, public holding has reduced in all other companies. In Prince Pipe, public holding has fallen from 21% to 17%. In Apollo Pipe, public holding has fallen from 36% to 32.7%. So over the last 5-6 quarters, smart domestic institutional investors have utilized this correction in piping stocks as an opportunity to add their stakes, and dumb investor, that is public, has consistently reduced its stake. I'm sorry to say dumb because it is the fact. Public always increases holding in poor quality stock and reduces holding in good quality stock with bright future prospect. And that's a big hint about what you should do with piping stocks now. Now let me take this opportunity to help you understand why the future of piping stocks is bright. Going forward, piping sector would see demand from three major sectors. First is construction sector. After a slowdown during COVID, housing demand has started picking up, which is clearly visible from real estate sector growth. Not only in real estate sector, there's a big capex growth in industry across sectors that would create a good demand for piping sector. Second sector is infrastructure sector. Latest union budget has increased the allocation for Jal Jeevan Mission by 27% to 69,684 crore. The goal is to provide piped water to every village in India by 2024. Then government has increased the budget for PM Awas Yojana by 65% to over 79,000 crore. Moreover, government has increased the capex spending by 33% for other infrastructure activity that would again act as a demand multiplier. Then third sector is agriculture sector. In the past couple of years, the demand from agri sector is not that good, but now that the PVC prices have fallen, management is expecting demand to pick up in agri sector from Q4 and then Q1 of FY24. Clearly, the future prospect in the medium to long term are looking very good. Now, when it comes to adding piping stocks, you have multiple options including Astral that commands a market cap of around 38,000 crore with a PE ratio of 98 and price to sale of 7.5. Then you have Supreme Industry that commands a market cap of around 32,700 crore with PE ratio of 39 and price to sale of 3.57. Then Prince Pipe command a market cap of around 6,200 crore with PE ratio of 54 and price to sale of 2.2. Apollo Pipe commands a market cap of around 2,100 crore with PE ratio of 88 and price to sale of 2.38. Finolex Industry command a market cap of 10,500 crore with PE ratio of 37 and price to sale of 2.1. Please note that the reason for high PE is due to sharp fall in earnings in last 1 year. Once the margins would improve, earnings would increase and PE ratio will fall. So from valuation perspective, apart from Astral, I find other stocks at decent valuation. Apart from these 5 stocks, you have one more option of Prakash Pipe that commands a market cap of just 350 crore with a PE ratio of 5.5 and price to sale of 0.49. Although it doesn't have FI and DI holding and major holding is with public, that makes this stock very volatile. Having said this, promoters are consistently increasing stake in company from 38 to 44% that instill confidence in the company. As far as latest brokerage house targets are concerned, on Astral, ICICI Direct has a hold call with target of 1560, ICICI Security has a buy call and HDFC Security has a sell call. On Prince Pipe, all brokerage houses have a buy call with a target in the range of 25 to 50%. Supreme Industry has a mix of buy and hold call. Finolex Industry has buy call with upside potential in the range of 15 to 30%. Apollo Pipe and Prakash Pipe do not have any latest brokerage target. Now tell me in the comments, what is your take on piping sector? And have you invested in any of the piping companies? If yes, let me know in the comments. I hope this video will give you a clear picture in terms of why piping sector stocks have corrected significantly and gives you a clear idea about what you can expect in the future. If you find this content useful, then do consider subscribing to the channel and share the video with your friends and colleagues. And let me know if you want me to cover any specific topic. I'll see you in the next video. Till then, take care.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.